Say you're over 65, you've just retired, and you sign up for Medicare. Then the letter comes, you owe an extra $2,000 or more in premiums over the next 2 years. Not because of what you make now, but because of the income you had while you were working. Most people get frustrated, grumble about the system, and then just end up paying those higher costs. But here's the good news. In this short video, I'll show you a simple 5-minute fix that can reverse these Medicare penalties and keep that money in your pocket. So what's actually going on here? These higher premiums are something called IRMAA, which stands for Income-Related Monthly Adjustment Amount. It's just Medicare's way of saying, hey, we think your income is too high, so we're going to tack on a surcharge to your Part B and Part D premiums. Now, most people aren't familiar with IRMAA until they sign up for Medicare, but it's a fairly complicated topic. Medicare doesn't just look at your current income. They actually look back 2 years at your tax return. So if you just retired in 2025, Medicare is going to use your 2023 income when you were still working to set your premiums. That's why so many new retirees get hit with this surprise bill. Two more somewhat complex things about IRMAA. Number one, it's a tax cliff, which means you are hit with a full penalty even if you are just $1 over a given threshold zone. It's also based off something called your modified adjusted gross income. It is not based off your taxable income. Now for 2025, here are the IRMAA thresholds. Remember, however, these are still based on your 2023 income. On the screen, you'll see the levels for single filers, and married filing separately. And notice something, the gaps between these penalty zones really aren't that big. For example, if you're a single retiree and you just barely cross into the first penalty tier, that's about $1,000 in extra premiums for the same Medicare coverage you thought you were getting at the standard costs. Then only $27,000 of income later, you're already into the next tier. And there goes another $1,000 plus in extra Medicare premiums. So this isn't just some problem for the ultra wealthy. These thresholds can catch a lot of everyday retirees who simply had higher working income or took a little bit too much out of their IRA in a given year. Well, let's walk through a really common scenario that we see in our practice. We have a single retiree who just retired this year at age 66. Over the last 2 years of work, they were earning a pretty good income of around $150,000. Now, prior to retiring, this retiree is going to sign up for Medicare so it begins right when they retire and their healthcare coverage stops. When doing so, they're going to get an initial determination letter from Medicare that says, hey, because of your income in 2023, you're going to owe an extra $200 per month in Medicare premiums because you hit 2 IRMAA threshold zones. Now, we can project this finding out as well to the next year in 2026. Again, because their income was high from working in 2024, they will be sent another letter going into 2026 that will have this exact same finding. On this next slide, I have the IRMAA penalties annualized out to show exactly how much they will be paying for Medicare's Part B and Part D premiums. This is a hefty penalty for anyone in retirement. Now, their income in retirement is set to be much lower ultimately, but Medicare doesn't know this. They're just looking at the income on the 2023 and 2024 tax returns. So is there anything this retiree can do to remedy this situation and let Medicare know, hey, I was working, that's why my income was higher. It's not going to be that high now that I'm retired. Luckily, there is a way, and you can do this through an IRMAA appeal. This is done through a form called SSA-44. It's a short form that you can fill out, and it'll take all of 5 minutes and can save you thousands. The problem is many retirees don't know about it. So let's walk through it together. The first section of this form involves just simply letting Medicare know who you are so they can identify you within their systems. One important point here before I forget. When you receive an initial determination letter from Medicare informing you that you are going to have these IRMAA penalties, you only have 60 days to submit an appeal. So make sure you're paying attention for that letter in the mail. Next, there are 8 qualifying life-changing events that they give you that can lead to a valid appeal. Now, there are a lot of things that could apply here. Divorce, loss of income, settlement. The one that will apply to most people watching this video when we talk through the situation is when you go from working at a good paying job to now retired. Either work stoppage or work reduction would apply in this scenario. Next, this form is going to ask you, okay, we know your income in 2023. Give us some kind of proof of reduction that shows us that this work stoppage is going to lead to a smaller income where we wouldn't apply that IRMAA penalty. It's going to give you 2 opportunities to do this. So let's say that you're someone who retired in January of 2025. There isn't going to be much income that you earn from a job in 2025, and you'll be retired most of the year. So your income will probably be much lower in 2025, and they can check against this next year when taxes are ultimately filed. If this is the case, you'd fill out step number 2. What if this person retired in December? Well, their income is going to be pretty high still in 2025 because they worked most of the year. So this type of retiree would fill out step number 3, which asks them to anticipate their income next year in 2026 when they're fully retired. For this, you would estimate the income you expect in retirement relative to your withdrawal strategy, and then fill out the information accordingly. Now, the IRS isn't looking for an exact estimate here. They're just looking for a number that backs up the reason for your appeal. So if you say you expected income to be $80,000 and instead you had $85,000, no worries. Medicare really isn't going to care. This being said, they are going to verify your income. So make sure that you have a valid reason to ultimately appeal. If you say your income is going to be $80,000 and instead it's $150,000 again, they will initially waive that penalty because the appeal looks to be valid. But when your 2026 income comes in at $150,000, they're going to claw back that previous appeal because that appeal was found later to be invalid. This leads me to an important point when talking about appeals. Whatever year you give them where your income is anticipated to be lower, this will be a very important year in tax planning. If you tell Medicare, hey, in 2026, I expect my income to be reduced to $80,000, then come 2026, you decide, hey, I actually think I'm going to do a Roth conversion, and that Roth conversion raises your income into those IRMAA thresholds, you will have multiple IRMAA penalties all based off that 1 year. The income you show in 2026 will affect your 2028 IRMAA because of the 2-year look back, but you also told Medicare that your 2025 penalty should be waived based on 2026 income. So Medicare will go back and again, reapply that penalty to your situation, and you will have multiple IRMAA penalties based on just 1 year of income. So make sure you follow through with the appeal and show that lower income in the year that you indicate. And finally, step number 4 involves proper documentation. For something like a work stoppage, a letter from your company specifying the retirement date is generally enough here. From here, all you need to do is sign the form and submit it. If done properly, you will have a successful IRMAA appeal, most likely, and will avoid 2 years of IRMAA penalties in the situation we laid out in this video. We do this type of appeal every day for clients just retiring, and our appeal success rate is extremely high. This type of situation is exactly why there is an appeal process in the first place. Sometimes in retirement, saving big can come down to just what you know. Hopefully this quick, informative video will help you save thousands in your situation. If you found this video helpful, make sure you hit the subscribe button down below so you don't miss future strategy videos just like this. And if you want help making sure you avoid Medicare penalties, manage taxes correctly, and build the right retirement plan for your situation, click the link in the description below or call our team directly. We'd be happy to walk you through just this. And always remember, you don't need more money, you need a better plan. I look forward to seeing you in the next video.